Okay, guys, and welcome back to the part three of Back to Basics, where we are taking my fiance Jess, and I am hoping to have her replace me as the trader in the house so that I can sleep all day and play video games. Essentially, the synopsis.
I don't know how that would be any different than what goes on now.
Ouch.
Okay.
That's hurtful. I'm
Truth hurts, honey.
deeply hurt.
Truth hurts.
So again, if you're watching this on my channel, then go check out Jess's. She's going to take this course with me and then document her own journey after that about how it is to learn to trade, the pitfalls, the setbacks, the successes, the whole like open book, whole 9 yards. It's a very rare thing that you find there on the internet. There's too many of the look at me, I'm rich, and not so much of the hard work behind all that.
But don't worry, I'll turn into one of those look at me, I'm rich real soon.
Hopefully. So yeah, if you're seeing that on my channel, go visit hers, and if you're on her channel, then go visit mine, and they're right there. All right, so technical analysis. So this is 90% of everything that you're going to do. We're going to spend a long time on this. There'll be a lot of lessons. We'll go real slow because this is everything when it comes to trading. So I put it's a combo of art and science, and we're going to go into the science. We're going to go into the statistics and the back testing and all the academic research that's been done. But if the market was able to be completely hacked with numbers, it would have happened, would have been over. So there is some kind of marriage of man and machine that makes this stuff work. So we'll talk about backtesting and statistics, but at the same time, you need to learn the art of it, and how you look at a chart may be different from how other people look at a chart. There is no right answer. There's a series of gray areas and maybes. So, first chart, easiest one to read, is a line chart. So essentially, a line chart is, well, what do you think you're seeing here? Just take a look.
A lineup.
Basically. So basically what it does, it takes the closing price, and this is Amazon, and every time there's a closing price of Amazon, it puts a dot. And then it's just connect the dots, right? So, you can tell it's going up, right? You can read certain things about it. It went up, and then, down through here, it pulled back a bit, and you can find out what the price is. And these are powerful, and a lot of people use them. But with each of these chart styles, we're going to go into the pro and con. Pro, you saw it right away. It's easy to read, right? There's just nothing, what the price of Amazon is right now. You can, if I said what price was it in July, you can find that out pretty easily, right? The direction of the stock, pretty easy to read. Easy to spot patterns. So we'll go into pattern trading later, but there's a handful of patterns and they mean certain things. But what's missing? Well, it's only showing you the closing price. So we know that on this date, it closed right here. So I'm talking about the top that happened at 1600 there. But you don't know what happened that day, right? It could have, in theory, gone all the way up to 5,000 and come back to 1600 closed. So you don't know. So it's missing data. So again, it's a good way to quickly spot like a trend or whatever, but it's just not the best when it comes to fully featured data. And then it's missing the powerful candlestick patterns, and that will be next lesson. Does it make sense?
Yeah.
Easy chart to read. Again, very useful for very long-term looks. People will generally use a line chart if they're looking out years, because those little ticks about what happened each day doesn't really matter, right? If you're looking at an incredibly long period of time. Next is a bar chart. These are a little bit more complicated, but what it does is it does the same thing that a line chart does, but then it adds in all that information. So you'll see a full chart, I think, in the next slide.
Okay.
If I did this right. But essentially, each day or each minute or each hour, whatever setting you have the chart on, there'll be one of these bars, right? So on an up day, you can see that the open's here, and the open is always a tick this way,
Okay.
right? Then the low is always the low of a candle, right?
And
The
it's
high is the high.
Other way.
And then the close is the tick the other way.
Got it.
So you can see on the left, that was an up day. is it opened, and you can almost guess what happened that day, right? So it looks like it opened, probably went down a little bit, then went all the way up, and then sold off a little bit, and then it closed, right?
How do you know that?
You don't necessarily know the order, but you can guess, right? Because it opened, right? Go here. So here's the open, and the low is below the open, right? So at some point during the day,
the low of the day. Sorry, I just thought that was just indicating that it was just like that was a higher number, that was a lower number. Like these are significant.
No, so all of the price action in the day is in that chart. Again, you don't know what order. In theory, it could have opened, ran all the way up to the high, then all the way down to the low, and then back up to the close.
Okay.
In theory. Probably not, right? Probably it opened, went down a bit off the open, went up a bit, and then closed.
Now, not to get ahead of ourselves, but is this not a candlestick?
You did get ahead of yourself.
Sorry.
So that will be next. But anyway, so this is what it would look like on a chart, right? So this is a chart of 5 days. On Wednesday, was that an up day or down day?
That was an up day.
Right? But what else happened that day? That was interesting.
It went really high for a second, and then people smashed it back down again.
Right. So you see how you just instantly, if this was a line chart, it would just show between the ticks that are going to the right. That's all you would see. You wouldn't have saw all of the action above or below it, right?
Yes,
So this is why this gives more data. And then Thursday, what's interesting about Thursday?
It's pretty much equal.
Right. So
What kind of day is that?
We'll talk about that's a very specific and my favorite candlestick pattern for anyone that follows. I look for that all day, and most of my trading happens off something like that.
Okay.
Very interesting that the open and the close is the same. So if you were looking at a line chart, nothing would have happened, right? Because Wednesday to Thursday, the price is about the same. So it would have just looked like a horizontal line. You wouldn't have known that it went all the way up, then all the way down, and then right back to where it was.
Gotcha. So why would you choose a line chart over the bar chart?
If you're looking at like a really long-term trend, basically, like if I'm looking at what the market did over the last 10 years,
okay,
I don't care about each individual tick up or down. If I want to demonstrate, if I'm looking at the correlation too between two things, if I want to see, the correlation between Apple and Google, right? I really don't care too much about the ticks. I just want the closing prices. And if you're doing mathematical studies, it's easier if you limit the data to just the close. Okay. But that's what you got to remember that people have been trading, and we'll talk about that in a second, but people have been trading for like 500 years, right? So way before computers, way before all this. So line charts were the first charts because it was super easy, right? You would go and, again, we'll talk in a second, but Japanese rice traders was the first like market that we know about. So they would go and they would come back and they would just write, okay, close at this price. And then the next day, close at this price. And then they would chart it out by hand. And it's a lot easier if you're just doing the points, basically, right? So the pros of bars chart, still easy-ish to read, right? Fairly clean. It gives HLOC, just stands for high, low, open, close, which are the 4 data points of every candle. The cons, it's kind of hard to spot at a glance up or down days because both bars were black, right? And we'll talk about that in a second. And it's still missing some of even though the same data is there, it's a little bit harder to spot the candlestick patterns because as a trader and investor, part of your job is you're going to sit down every night and you're going to go through 50 charts, let's say. So the more visually interesting you can make the charts, the quicker they'll spot out at you, the less time you have to spend on each chart, and then the less time you have to spend total, right?
Okay.
Which is kind of Tradidea's whole thing. It's how do you take something that takes a long period of time and make it take a shorter period of time, right? So Japanese candlesticks. So Japanese candlesticks have been around hundreds and hundreds and hundreds and hundreds of years. So this is just the story of one of the first guys who actually used them. Because again, they would all go and trade rice, right? Mm-hmm. The farmers would come and trade rice, and then people who wanted to come to trade rice would trade it as well. But it was very hard to always find a buyer and a seller, right? So that's what we do as traders, where we're a bit of the middleman. So if I made rice, right, and I'm going down to the market to sell it, if there's not someone there who immediately wants to eat rice, I've got to lug that shit back home and then come back tomorrow. But if I can find a trader, someone who may not want the rice for himself, but thinks that there's going to be a drought or whatever, and he thinks he can sell the rice for later, he's going to buy it, he's going to hold it, and he's going to sell it. So that created this market of these people that was their entire job. They would wait, they would stay at home, and they would wait till they think the price of rice kind of evened out. And then they would go to the market, and they'd buy all the rice they could, and they'd take it home. If they were right and the market price went up, then they'd go to the market and sell it, and that's what we do as traders. So this guy, apparently, he made 100 transactions in a row and made the equivalent of what $10 billion would be today in the rice markets. So on the bottom, the government actually opened up an exchange to trade rice, and they brought him on and they gave him the title of samurai, which was, it's a big deal. He got knighted, basically, just because he was wicked and made a bunch of money. But how he did that was he invented Japanese candlesticks. Now you can see they're essentially like bar charts.
Right.
But the coloring just makes them quicker and easier to see.
Right.
So on the green day, it opened at the bottom of the candle, where that opens up here, and then sold off a bit, and then came up and closed. And same on the red one, the open was at the top of the candle. Then probably came up a bit, sold off, and then closed. Okay. Make sense?
Yep.
Same kind of thing as bar charts, just a little more colorful. So then this is a trade that I'm in now, and this is just what a series of candlesticks will look like. So you can see...
Depending on the software, could you change the color of these candlesticks?
Yeah. Yep. Mostly it's pretty generic for green up, red down. You can change them depending on the software to whatever you want. A lot of people will sometimes do black and white, fuchsia and pink and
teal.
Yeah. Pros and cons candlesticks, again, they're still easy to read. They still have all the data, and they give short-term trading signals. And that's what the next lesson is going to be about, is there are patterns that this gentleman who created candlesticks basically came up with that allows you to trade, basically gives you signals based off what the candlesticks look like. So that's not, again, nothing I ever say is going to be, and this solved the market, right? There'll never be, and this is the end. But this will be the first tool to your arsenal. And then the whole point of trading is to stack as many tools as you can in your favor and then place the trade. And then at least you've got, if you have 10 tools in your toolbox and 8 of them are saying to buy, you buy. And you've got the odds stacked a little bit in your favor. And then there's risk management, right? You can be right 30% of the time and make a crap ton of money, right? Just depending on how much you risk. So then for the cons, I put, they can be loud. If you look at a chart like this, some people are like, there's a lot of colors, there's a lot of wicks, so they can be a little loud until you train your eye. Then there's a bit of a learning curve, but you've seen the learning curve, you're done it basically, right? It's the learning curve is mostly going to be in the next lesson too, when you talk about the different candlestick patterns and all that. So there we are.
That was an easy one.
That was an easy one. No questions?
I don't think so.
Okay.
When do we get to start making money?
A long time. A very long time. If you were going to be a doctor, how long would it be?
Doctor of what? Doctor of making money? Tomorrow.
Okay, let's end that there. Friggin' nerd. There's the just go to those places and do likes and thumbs up and all that. Okay.